for our thematic discussion of the day, and today we're putting the spotlight on the roads sector. Now, what we have started seeing is a pickup in the ordering activity from NHAI, National Highway Authority of India, in the months of June and July, though, of course, construction is a little damp, if I could say, and that's for obvious reasons, because we've been in this very heavy spell of rains across the country. So what does all this mean? What are the bigger macro numbers from NHAI telling us? And more importantly, from a stock perspective, what are the companies to focus on? Well, we have the expert from Nuvama joining in, Parvez Akhtar Qazi, Executive Director at Nuvama. Parvez, thank you very much for joining in on this chat. So as we were just going through your note, it's becoming clear that at least the award activity is picking up. I'm looking at the numbers year to date, as in from April till now, FY24, I think we're at, 401 kilometers. What's your overall sense? Will the execution pick up? Because I think that's the bigger question mark as well when it boils down to coming to companies and revenue and the actual P&L.
Hi, good morning. So we do believe that execution will pick up in the second half of the year. In fact, execution could have been better than what it has been in Q1 also, but this time the rains have been very heavy, especially in the western part of the country. So that has obviously impacted execution to some extent. Nevertheless, we do believe there is going to be a healthy pickup during the second half of the fiscal.
Parvez, getting back to the ordering, I was reading your note. You're saying that NHAI did not award any road projects in April and May. It started awarding in June, but just about 3 projects of 87 kilometers. And then in July, we saw a pickup of about 300 plus kilometers of road projects being awarded. Now, totally, in the first 4 months, that's April to July, we've seen orders worth, 400 kilometers roughly. But the target, I believe, is a lot higher, right? 5,000 kilometers for the full year. Is that correct?
So in fact, the target is somewhere over 6,000 kilometers. But we do believe that is achievable. If we see over the last few years, most of the NHAI award is heavily concentrated during the Q4 of any year. So for example, if you look at FY22 and FY23, of the total project award during the year, more than half was awarded just in Q4. Consequently, that also means is awarding activity is always muted in Q1. So which is why the 400 kilometer kind of project award during April to July isn't really a surprise. We do believe that there is going to be a substantial pickup as we go ahead. The only cause of concern, if one might say, is that in Q4, the elections will be very near. We need to keep into mind what impact the model code of conduct could have on project award in Q4. So I would say that is probably the only concern. Even if, let's say, it plays a spoil sport, all that you will see is probably some slippage happening from Q4 to Q1 of next year. But otherwise, I mean, in terms of overall project award trajectory, that should remain pretty decent.
What's the target again for FY24? Road awarding target is?
We do believe that NHAI will award upwards of 6,000 odd kilometers of projects in FY24.
And the construction target is the same? Or is that different?
The construction target is now slightly the same. I mean, there are news reports which said that earlier NHAI was given a target of about 5,000 kilometers, but government is looking to scale it up to 6,000 kilometers as far as construction is concerned. So you could say both awarding and construction should be 6,000 odd kilometers for FY24.
Okay, got that. Parvez, thanks for joining us. I also want to talk to you about some of the companies that, you're looking at on the back of all of this ordering picking up, because we have been talking a lot about commodity costs coming off, which of course bodes well for margins. But on the other hand, there's, this higher intensity of competition that we're seeing that could perhaps hit the margin as well. So how do you see the margin for some of these players moving from here?
So we do believe that margins will more or less remain stable at these levels only, while there will obviously be tailwinds from the softening of commodity prices, but that would get negated by the higher competitive intensity that we have been witnessing in the road space for the last couple of years. So overall, we expect margin trajectory to broadly remain stable at these levels only.
Okay, so let's come down to your picks. You like PNC Infra and KNR Construction. And this is the big question, Parvez, because it's a cluttered space, a lot of road contracting companies. Why have you picked these two, and what are the metrics that you are looking at, apart from obviously valuations, when you are going ahead with your top picks in the road sector?
The reason why we like these two companies is the balance sheet strength. So for both these companies, the balance sheet is in a very healthy space, which should allow them to take a higher share of HAM projects, which need some kind of capital commitment from players. So that is why we like these companies. They should be able to get more HAM projects, and therefore their dependence to get EPC projects, where the competition is much higher as compared to HAM, should kind of help them to maintain their margin trajectory.
Okay, so you like them because they might do more of hybrid annuity projects, and you like them because of their balance sheet strength. Okay, got that. What are the major triggers? I mean, as any investor who wants to get into the space, what are the major triggers that they should watch out for in terms of some of the other companies or any other sort of major catalysts, so to speak, as we go down the year for road contractors?
The only major catalyst is project award. The other catalyst, which kind of seems unlikely today, but if it happens, it is going to be positive, is if the government takes some measures to reduce the competitive intensity in the sector. This could be done by tweaking the pre-qualification norms, which were kind of diluted when COVID hit. That is, in fact, one of the reasons why the competitive intensity has gone up over the last couple of years. So if government tightens those pre-qualification norms again, it could be beneficial for some of these larger players like KNR and PNC.
Okay, all right, Parvez, got that. Thank you very much for joining in and giving us some perspective on the road space and the stocks that you like within that space. We've got Varun Beverage numbers coming in, 13% increase on revenue.